Hello investors, welcome back to my channel MKS Investment. Brigade Hotel Mainboard IPO is currently going live. The offer is priced at 85 to 90 rupees per share. This company is mainly involved in construction and managing hotels. Company is incorporated in 2016. So for the financial year 2015, company has generated a revenue of 468 crores. Revenue is continuously increasing for the last 3 financial years. Profit after tax for the last financial year comes at 23 crore, which is 5% of net margin. Company is making profits for the last 2 financial years. There is a high possibility of account manipulation for IPO. They might be doing some accounting tactics to show profits. Big concern for the IPO is debt. Company is having more than 1.5 times of its revenue as debt. Debt is continuously increasing. At upper price band, the issue is trading at a price to earnings ratio of 120. However, the average sector P/E of hotels is 50. It looks like this IPO is aggressively priced, leaving no room for investors. Company is going to use 63% of IPO proceedings to repayment of its debts. So at the end of day 2, the IPO is subscribed by 1.1 times. Almost all categories show dull participation. There is also a shareholder category for Brigade Enterprise shareholders. In grey market, shares are trading at 8 rupees premium to IPO price. In recent times, most of IPOs list at a discount to grey market premium. So there is a high possibility this IPO might list at par or a very less premium to IPO price. I am avoiding this IPO. If you are a high risk taker, you may participate, but I am not expecting much gain in this IPO. Next one is Shanti Gold International Mainboard IPO has opened for subscription Friday. Company is mainly involved in manufacturing of 22 karat jewelry. It has started its operation in 2003 and mainly involved in manufacturing of 22 karat gold jewels. Company is constantly increasing its revenue. For the financial year 25, it has generated a revenue of 1100 crores and a profit after tax of 55 crore. It looks like profit after tax margin is very less, comes at 5%. However, at upper price band, price to earnings ratio comes at 19, whereas the industrial average is 40. So it looks like IPO is reasonably priced. The major concern for this company is lack of retail presence and debt. Company is having debt to equity ratio of 1.6. Competitor companies are having debt to equity ratio of 0.5. Generally, debt to equity ratio more than 1 indicates company is highly leveraged. It is a warning sign. At the end of day 1, IPO is subscribed by 1.1 times. In grey market, shares are trading at 40 rupees premium to IPO price, that is 20% premium. Let's look at subscription numbers on day 2 and make a decision on whether to participate in this IPO or not. If you want more information about any of the IPOs, do leave your thoughts in comment section. For more updates, consider subscribing my channel.